Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. If that is what the comments suggest, again, no real market reaction. The real action will be on the details, especially around what the market expects versus what the Fed says. With inflation much higher than expected on the last report, especially in areas like housing, the market expects continue with hawkishness. But the fact of the matter is that there are signals that inflation may be peaking as higher frequency housing that is happening. The real question for this Fed meeting is whether it is noticed and choose to acknowledge those trends. If so, that would likely be interpreted as a surprise on the dovish side in its comments, and that would rattle expectation. Bet on the Hawks menu. The betting is still on how hawkish this growth continues. Job growth is healthy, spending is still responsibly strong, and that the recessions that everyone expected has not shown up yet. Will the Fed's higher rates policy is working as the marine slow down, a soft landing is still a real possibility, given that amid the current inflation numbers, expect the Fed to hold the bid one on the expected 75 ppm this meeting. That is a lot, and the hawk are certainly in the lead going forward as well, but the expectations for the next meeting are softer and more vulnerable to interpretation. So, the Fed's comments will be important. Something as simple as re-emphasizing the data dependence of its decision-making process is a reminder that data can change, and that impulsivity calls into question the most hawkish outcomes. And that is what I expect, a strong 75 ppm for the meeting, but a softer emphasis on data dependence for coming meetings. While this still remain objectively a hawkish stance, it will likely be interpreted as more dovish compared with current expectation, which could be good for market. The other thing to look for will be on a hand toward where rates are expected to top out. Here, this will be another good guide to how past this and the next meeting. The Fed sees the economy evolving. One of the main drivers of continued inflation is expectation, which can become a self-fulfilling prophecy. Will there were signals that public inflation expectation over the next 5 years has started to rise. Multiple surveys are showing they have now pulled back, reducing the risk, which is a caveat worry. Overall, there are signals that the Fed's policy has largely done what it intended, and that might temper its long-term rate increase expectation. That will once again be dovish compared with current market expectation. Upside ahead, that will be the real thing to analyze from this meeting, not the 75 ppm increase, but where market expectations are compared to what the Fed is saying. Expectations are very hawkish, and the Fed can come out just as expected and still be more dovish than expected. That likely limits the market downside from this meeting and just may provide some upside going forward. Brad MC Milan is the Chief Investment Officer at Commonwealth Financial Network, the nation's largest privately held registered investment advisor, broker, or dealer. He is the primary spokesperson for Commonwealth's investment division. He is also the author of Crash Test Investing, a must-read primer for Main Street investors seeking to help insulate their portfolios against a market crash. This point originally appeared on the Independent Market Observers, a daily blog authored by Brian MC Milan. U.S. strengthens while the market struggles. A busy will ahead for central banks with 6 scheduled events across 5 countries. The market participants are only concentrating on the Federal Reserve, which is predicted to increase interest rates by 75 basis points, bringing the federal funds rate. Overall, the market's risk appetite seems to be low, with most assets in the red. Bitcoin hit a 3-month low, declining by 4% by over the past 5 hours ahead of today's market open. The US stock market is also down today, with Nasdaq seeing the strongest decline. Gold and crude oil are also lower than the market open price. On the other hand, the US dollar is the great. The US dollar index has increased by 2021 this morning and is almost at a 3-week hike. Some analysts believe the USD can increase above its yearly high this week, but the price movement will depend on the Fed's announcement. Crude oil, technical view. Crude oil fell this morning and is now close to three-day price low. The price has declined for 6 consecutive hours and is approaching previous support level. Traders are contemplating whether the price will form a bearish breakout or if the price will rebound. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.